Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the start of the week session for the Forex Training Room on May 10th of 2020. We'll be going over our usual currency strength meter for the past week and month, any fundamental announcements on the calendar for the week, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting out with the ledgers, we did have a bit of a drawdown on pretty much all three accounts this past week as the market went decidedly sideways. On screen is the long-term ledger. We're still nicely positive, but we did take about a 7% hit over the week. We opened one new trade, a pound JPY long, and well, actually, we don't have all that many trades for the year as such, this being the long-term account. But overall, we are, again, nicely up for the year, down for the week. Intermediate term ledger, we did have, again, almost a 7% drawdown on this account as well. Seems to have been the common denominator for the week. We've got actually not that many. We've got 3 trades open right now. All of them are at profit, so that does offset somewhat of the drawdown last week. So we'll have to see how these trades end. The market was very, very sideways as well as bouncy this week that just ended. And the short-term ledger, again, about 7% down on multiple trades. Only one of them actually turned out to be a winner, which is pretty much symptomatic of sideways weeks. So that is where we are with the results for the week that just ended. Notes and opportunities for print. As I said, it was a sideways bouncy week, so these will happen every now and then. Coronavirus fears and response to those fears continue to be driving the market. Unfortunately, they're driving it in both directions depending what hour of the day you look at. Here in the U.S., we've had, depending on which state you live in, some of them are opening up. Some of them said they would open last week only to postpone it somewhere around the middle of the week. People's fears are still heightened. It's just been going in both directions, and our leadership at the state level is decidedly not on the same page. So again, it promises to continue to be a bumpy ride while we get through all of this. But again, opportunities from now through end of year do promise to be significant. The economy is very stressed. I don't think there's going to be a sharp or even a quick recovery at any point to everything that's been going on. However, some sectors will be better treated than others as things start to gear up again. And the key thing will be identifying those opportunities and taking advantage of them. These are all going to be longer term opportunities. So we will be focusing in the Forex market, at any rate, we will be focusing on intermediate and long term. And of course, we'll continue to trade the short term with whatever that week happens to be doing. But you want to look beyond the Forex market as well. Some of these opportunities, particularly in the commodities market like oil, are going to be spectacular. And there will be some things that will not be coming back. And again, the trick is going to be figuring out which one is which. Our live event, as I keep mentioning, will be rescheduled. At this point, we're looking at somewhere mid to late fall based on everything I'm seeing happening right now. It'll be in the same place we had scheduled it for before. So I will be providing details as soon as some of this starts firming up and getting locked down. Relative strength meter for the past week and the past 30 days, the monthly is down in volatility by about 4 points. We still see the Australian dollar as being the clear winner for the month, the pound being the clear loser along with the Swiss and the euro. So the European currencies have not fared well on the monthly. The yen, the Kiwi were winners. Dollar was pretty much gaining against the European currencies only, losing against all the others. The Canadian dollar has been very middle of the pack, which is odd. You would expect more of a hit from dropping oil prices on the Canadian dollar. That has yet to really materialize. The metals didn't fare too poorly, not too deep of a move, but they did well overall. Going back to the Australian for the monthly, you can see how deep that blue color is. So the Australian dollar was and continues being the key winner over the last 30 days. On the week that just ended, we had a higher volatility than what's been carrying for the month. So we came in at 4.5%, give or take. Australian, again, a winner. The Canadian was a winner. Silver was the clear winner of them all. Then we have I would say the Canadian didn't do too poorly. The Swiss, the Euro, the Pound, the key losers. The Yen, the Kiwi, the dollar, pretty middle of the pack. Calendar for the week, we don't have much going on. We've got an interest rate decision out of New Zealand coming out Tuesday late evening. So we will be trading that. That will likely replace our regular Tuesday evening session. So we will postpone by a couple of hours so we can take in that interest rate decision and rate statement. On Wednesday, we have the unemployment rate coming out of Australia. This will also replace our evening trading session since it's going to be happening at 9:30. So we'll likely open up the trading room around 9 o'clock and then do our regular evening trading and wrap up by trading the unemployment numbers out of Australia. And last but not least, on Thursday, also 10 p.m., also replacing the evening session, we will be having the budget release from New Zealand. I normally don't trade these kinds of announcements, but in this scenario, where we're looking at what the longer range plans on each economy are going to be, it's probably worth our while to show up for that. So I'll be trading that. I also want to point out that the Australian dollar and to some degree the Kiwi dollar are, for the first time in a number of years, probably in a better position than other currencies to stage a recovery. They've both been hard hit for at least 2 years that they've been dropping. But the thing is, if the Chinese economy starts showing any signs of recovery, the proximity geographical of Australia and New Zealand are going to make them prime trading partners for the Chinese. And so even though the Australian and New Zealand economy are not doing too well right now, that could be a game changer if we see the Chinese pouring money into these two economies, if only in trade. So keep a close eye on those two currencies because they may provide opportunities sooner than anything else out there. And with that, we're going to move into our charts, starting with oil, the commodities. So we have seen oil staging a recovery that's very similar to one it staged about a month or so back, sometime towards the end of March, and it didn't go any higher than what it achieved last week. So we saw it hit the 27.25. It hasn't been above that point since back in early March. So we're going on at least a month and a half of this whole debacle with oil price. I do think oil price is going to be recovering for two reasons. One, because the economy is going to at some point start gearing up again, and oil is the lifeblood of most of what we consider the economy. So there has to be some recovery to some degree in oil prices. But more importantly, with oil as cheap as it is right now, production where it can be shut down has been shut down. So you're seeing the lowest number of rigs in the US and Canada that we've seen in decades. And these cannot be started up again at the drop of a hat. It's a long, drawn out process. So when demand for oil picks up, there's not going to be the oil to be able to satisfy it. That will mean the prices will go up. However, there's no telling whether they'll still go lower, how long this is going to last, nor when such a recovery will happen. So as always, keep an eye on what the charts are doing, what the opportunities are. Long term, you're probably not going to take a hit. We're looking at sometime in 2021. I don't trade oil directly. Well, actually I do, but I don't trade it in what we do here in the Forex trading room. But if you're going to do anything with oil, make sure it's not for next month or the next 2 months. You got to place it out in 2021, preferably the second half of 2021. The recovery could happen much sooner, but it doesn't matter. If it happens sooner, you're still going to make a ton of money out of whatever trade you place. But if it does take longer, the more time you buy yourself, the better off you will be before all is said and done. Moving on to the currencies, the euro did not fare too well for most of the week. Started recovering Thursday into Friday. Didn't make it too far back up. I do think the opportunities for shorting the dollar are still there. There's still going to be a good chance to trade some of these dollar charts to the opposite extreme of where they are. But of course, you can still get clobbered if you get in at the wrong time or if you carry a losing trade too long. So as always, we'll be trading these as carefully as we can. There is no gain without associated risk. So some of these trades are obviously going to end up being losers, but in the long run, I'm pretty certain we'll be making more than we let go while we're trying to find the right trade. So that's that. Pound dollar also faced somewhat of a recovery towards the end of the week after going down for the first 3 days. It's still in a very sideways range. It's still looking for a breakout. And these are pretty much what I call prime opportunities. When you see a pair or any instrument that, for that matter, that is trading sideways, just keep an eye on it. It'll break in one direction or the other. You don't really care which direction. You just want to be there and trade it accordingly. So that's what we'll be doing with pound dollar. USDJPY, on the other hand, has been dropping quite nicely. So we do see dollar weakness, yen strength in the market right now. It broke a key level of support last week at the beginning, then continued dropping for the next couple of days and did a bit of a retrace Thursday into Friday, still ending up well below that key level. So we'll have to see how the market continues as the week opens, but this is still a very nice short opportunity from everything that the chart is telling us. USD Canadian, another one of these sideways pairs, doesn't seem to be able to pick a direction, but is swinging very wildly. So we have 100, sometimes 500 pips in one of these moves that really doesn't end up going anywhere. At this point, I'm waiting for it to either bounce off of support or pierce it to tell me which direction I should be trading. The dollar is weakening. The Canadian is weakening. This thing could go in either direction quite easily. The more important thing is that the volatility this pair is providing definitely is something we should be looking at, as it's moving more than 100 pips a day very easily on average, as you can see from the ATR at the bottom of the chart. So another good candidate, just have to wait for the right opportunity. USD Swiss, another one that is more sideways than anything else, does have a bit of a wide range, not as wide as the USD CAD. This one is moving up and down by about 200 pips. We've been trying to trade it in both directions, but again, very limited opportunities as it turns around as quickly as it started. And my gut feeling is that we'll have a chance to trade it down just on the basis of dollar weakness, but the market doesn't seem to be agreeing too much. The market is in what I like to call denial. For obvious reasons, the dollar should be weakening, but it is not. We can't expect the market to be rational or logical. It's going to do whatever it's going to do. So it doesn't matter what I think. The important thing is to trade it in whatever direction it happens to be moving, and eventually we'll latch on to one of these bigger moves that does take it up or down by 1,000 pips or so and makes our month. Aussie dollar, this is one of two pairs where I see some really good opportunities, not just to trade it to the top of the chart, which would already give us about 600 pips, but very likely beyond. As I mentioned, if there is somewhat of a Chinese recovery, the Australian dollar is one of the better currencies to be in for when that situation happens. So right now we are trading it up. I think we're carrying profit on that trade, and we will continue doing so simply because that is the trend. But I think we're going to have an opportunity to go into a rocket when this thing picks up, or if it turns around, I don't really care. I'm agnostic. I don't mind being wrong in my opinions. I will trade it in whatever direction it happens to be moving. But for quite a while, this thing has been moving up. Kiwi dollar, same thing. This is the other pair. So the Kiwi and the Australian are connected at the hip, and they tend to move in tandem, except for very brief periods where that relationship is broken. Right now, it's playing out. The Kiwi is moving up, doing a bit of sideways dance every now and then, but in general, ending up higher and higher, just a little bit more sluggishly. But this is another one where we have a 600 plus pip opportunity trading it towards the top, and there's every reason why that could certainly happen. That's it with the dollar pairs. Aussie Canadian is already testing the top. So we see an Australian pair that's already going hyper. I'm waiting for a piercing of the top. We did trade this one up for the longest time, and I think we're still in it. We've re-entered it a number of times, and we're looking for it to just break the top and keep going. Another one that shows every indication that indeed that is what it will do. Euro Swiss still hugging that bottom, hasn't pierced it in a while. It's a very strong level of support, but the euro is definitely not having a good time. This is a very bearish chart. It is our oldest open trade. We're carrying a small amount of profit, nothing to write home about. Then again, we traded it all the way from the top to the bottom in multiple trades. So it's not like we're losing out or doing something wrong on this pair, but it is taking a very long time to break that bottom and keep going, assuming that's what it's going to do. So I've had this on my radar to close it if it doesn't move for a couple of weeks now. It's once again testing support, so I'll give it the benefit of the doubt another week and see what it does. But if I see it retracing towards the cloud again, I'm probably going to get out of the trade and just wait for another breakout and jump in then. Euro pound, we've been trading it down. It worked out quite well for a while. It's now gone sideways. I think we still have one trade open, a re-entry, which is either a break even or carrying a small profit or loss. I forget which. We can see that it's gone sideways now since the middle of March, and we're still waiting for it to attack and perhaps break that trend line and give us a further boost towards the bottom. So this is, I think, the second oldest trade. This one I'm not ready to give up on. It's absolutely bearish in all regards. So we'll let that continue to play out. EURJPY already hit bottom last week and bounced. Actually, it pierced bottom last week, made a new bottom, or hit a prior bottom, I should say. That's an older trend line, and is now popping back up. If it pops above resistance, I'll probably trade it up. If it bounces back down, I'm going to go in short. This is, well, all of them are, but this one in particular, I really don't care which way it moves. It's a good mover. It will move 300 pips in a week quite. Okay, so Euro Canadian is once again playing with support. It has not been below its current price level since back in late February. So if it does break, it's probably going to give us a very good opportunity to trade it back towards the prior price range, which was anywhere between 147 and 144, as we can see towards the bottom of the screen. In fact, it was as low as 142.5 before making the pop back to the top. So waiting on that support break to see if there's anything tradable there for us. Pound JPY is, or actually did break support last week before popping back above again. So still technically sideways. Technically, we could see that it is at the bottom of a sideways range. So it could still go either way. It does show promise for a short based on the fact that it did break support, but definitely not out of the woods. It stayed below support for too little time. So we're going to just stick a pin in this one and come back to it at some point when it shows a little bit more action. I think we do have one trade open on the pound JPY, forgetting which direction, but well, we'll wait and see what happens. Aussie JPY playing with resistance. This is probably a pair that's more likely to go sideways than anything else, although it does look like it's looking for the top yet again. But with everything in that region of the world, in the Asia Pacific, they tend to be in lockstep. So I don't think that the Aussie and the yen are going to be moving in opposite directions. So what's good for the Australian economy is probably going to be good for the Japanese and vice versa. So if it does break through resistance, probably going to be a good long for a few hundred pips. I don't think it's going to move all that much. But well, again, we'll see what happens. This is not going to be one of my favorite pairs. Euro New Zealand taking a stab at support yet again. This might be the opportunity we've been waiting for to trade it down for 800 to 1,000 pips. Too soon to tell. We've been trying to catch that bigger move for a while and it just hasn't panned out. What I do think is that the euro is weakening and the Kiwi probably isn't. So this is one where the risks are probably going to outweigh, I'm sorry, the profits are probably going to outweigh the risk at some point, assuming it does break support. So keep a close eye on this one as the week evolves or as the month evolves. Not sure how long that's going to take. Pound Canadian was bearish for most of the week, slowed down Thursday and Friday, but still managed to end up far below where the week started and below support. Not sure if it's going to have enough strength to keep going. This is another one of those pairs that I'm very eager to see what it does as the week begins, to see if it gives us an inkling as to which direction we should take it. Pound Swiss sideways. It has been sideways for quite a while and shows no sign of breaking out of that. So probably one of the less interesting pairs out there right now. That's it for the charts. Setups we see in progress continue being the coronavirus and nothing else. So I won't even belabor that. Just it is what it is. And some final words here in conclusion. Always stay the course. I try to stress this message often. The only way to succeed in trading is to have a plan and follow it. Of course, it can't just be any plan. It has to be a plan that takes everything into account, everything that you need in trading. And a big part of that, of course, is risk management. That doesn't mean you're never going to lose. Losses are inevitable in markets. The key thing is to lose a little bit and your gains to be bigger than your loss. Once you have a plan, you cannot deviate. This is where most of the failures in trading happen. Not all days or weeks or months are going to be winning ones, and drawdowns are when temptation strikes the harder to deviate from your plan. So once you have a plan and it's been working out, do not deviate because it is meant to protect you both in good times and in bad, and you need protection in both. So don't deviate, always trade your plan. That is the end of this presentation. Do I have any comments or questions from anyone? And again, apologies for the interruption there in the middle of the presentation. Okay, folks, thank you very much. We will be back tomorrow in our regular schedule. I will be sending a summary of this presentation out very shortly. Thank you.